Crypto opened the new week in repair mode, then met fresh resistance. After Friday's sharp decline, Bitcoin briefly reclaimed the 115,000 zone, with Ethereum and large-cap altcoins participating in a broad bounce. That early stabilization signaled that forced selling had eased and order books were refilling. Through the European morning, momentum cooled. Bitcoin slipped toward 112,000 on renewed risk aversion, while several majors retraced part of yesterday's gains. Intraday commentary linked the softness to ongoing trade headlines and thin liquidity, not to any single crypto-native catalyst. Context remains essential. The late-week drawdown erased roughly $19 to $20 billion in market value at its peak and triggered the largest wave of liquidations this cycle. Derivatives activity pivoted quickly toward protection as traders added puts and reduced leverage, a typical response after an external shock. Macro cues are still in the driver's seat. The dollar eased off its highs overnight, but sentiment stayed fragile as markets parsed the latest signals around US-China trade relations and potential counter moves. Crypto traded in step with broader risk assets rather than on-chain specific news. Under the surface, structure looks more balanced than the headlines imply. ETF flows remain a quiet stabilizer. Cumulative inflows into regulated products have stayed firm across the month, even as spot prices swung. That backdrop helped Bitcoin hold bid on rebounds and limited follow-through selling when intraday dips appeared. Altcoins showed mixed behavior. Leaders from yesterday's bounce gave back part of their move as liquidity thinned, while a handful of names faced token-specific flow. For example, isolated whale activity around XRP shaped a narrow resistance support band intraday. These idiosyncratic prints matter tactically but did not alter index-level direction. What matters next is where liquidity congregates. If buy interest continues to cluster above 112,000 for Bitcoin, the market can keep probing 115,000 to 120,000 without needing a fresh catalyst. Failure to retract bids there would reopen the 105,000 to 110,000 range and, if stress returns, the deeper 95,000 to 100,000 support built earlier in the quarter. Derivatives remain the near-term swing factor. Options volumes elevated into and after the sell-off, and today's hedging flows continued to dampen breakouts in both directions. A gradual contraction in open interest and steady funding typically precede calmer price action. The tape is beginning to show that pattern, but confirmation requires a few more sessions of lower realized volatility. From a technical lens, indicators have reset. RSI and momentum oscillators pulled back to mid-range after the spike and fade, consistent with consolidation rather than trend failure. Breadth improved during Monday's rebound and narrowed today, a classic testing day that often appears after extreme moves. For participants prioritizing signal over noise, the checklist is straightforward. Levels: BTC = $112,000, $115,000. Near-term pivot: ETH needs to sustain above the $4,000 area to keep leadership intact. A daily close back above those pivots would argue for stabilization. Repeated failures invite range trade conditions. Flows: watch ETF creations, redemptions and exchange net outflows. Persistent creations and light exchange inflows imply patient capital is intact. Macro: track the tone of US-China trade updates and the dollar path. Easing rhetoric and a softer dollar tend to unlock bid for risk assets, including digital. Derivatives: skew, funding, and OI compression. The message for today: the rebound is being tested, not rejected. Liquidity has returned enough to slow the fall, but conviction is still rebuilding. Until macro pressure clearly fades or inflows accelerate, price is likely to respect levels and respond to flows more than narratives. Markets evolve by adjustment, shock, balance, decision. We're in the balance phase, where patience, not prediction, preserves opportunity. For more insights on Bitcoin, Ethereum, and the forces moving the crypto markets, remember to like, subscribe, and keep learning, here at Crypto in Black and White.